Welcome to this week's look at the state of the New York City real estate market, and happy 2024. This is my first report of the year, and as promised, I am bringing you the year-end report for 2023 and the forecast for what is coming in 2024. So we're going to get started in a minute. I just want to say, if you have any questions, please post those below. You can always reach out to me directly at Sotheby's as well. So we're going to start with the year-end recap for 2023, and we're going to start with the luxury market. The luxury market for the decade took 5th place, and that's not so bad when you think about what a tough year 2023 was overall. There were 1,198 contracts signed for properties priced at $4 million and above, and of those, 240 were for properties that were priced at $10 million and above. In terms of the property types, the condos far outsold the co-ops. 720 condos sold, 269 co-ops, 27 condops, and 132 townhouses. If you've been following these reports, that is not a surprise to you that condos outperformed every other property type far and away. There's a lot of reasons for that. Condos do so well. For the sake of this report, I won't get into a lot of those details, but if you have any questions about why that is, you can always ask me. Just write to me below. I'm happy to answer, or send me an email. The sales volume for 2023 for the luxury market, $9,984,115,836. Average days on the market, 615. As I've said, luxury properties take longer to sell. Some of them, many of them, are new development. Those have a much longer time in the pipeline, so not really surprising there. Plus, they're just a much higher price point, and there aren't as many buyers for those. The average discount to last asking price, 9%. And we saw, from a price action standpoint, the luxury market is down about 8% from 2022. So now we're going to switch over and take a look at the Manhattan and Brooklyn markets for 2023. If we start with the inventory, we see that the inventory came in 6th place for the decade. Not surprising there either. We knew that we were very low in inventory last year. If we look at the contract signed, 9th place for the decade. Tough year for sellers. Very challenging market. And we saw some properties doing okay, but not all, especially those properties that needed work. We saw that condos did very well. We saw the other property types not so much. This would account for the lower contract activity. Just was not at all a robust year. If we look at the average discount to last asking price for 2023, down about 6 to 7%. Price action overall for the market in Manhattan and Brooklyn down about 10%. That being said, from Thanksgiving to the end of the year, we did see a bit of a pop in traffic, offers, contract activity. Still awaiting the data on that, but it would suggest that there is a potential bottom forming, and so it may mean that this very lengthy down market has kind of reached its bottom point. And where do things go after they hit the bottom? Well, mostly they go up. So now we're going to talk about what looks like is coming in 2024. So, forecast for 2024. Well, we know that the real estate market is cyclical, and it definitely looks like the market this year in 2024 could well be better, slightly better, maybe a lot better than in 2023, a year when mortgage interest rates surged, inventory fell, where the news all around us was very uncertain and full of, let's call it, bad news. Things have changed. First of all, the mortgage interest rates are starting to come down, and they are forecast to continue to come down over this year. Now, that is one factor that is going to have an impact on the market. One of the ways that it will have an impact on the market is that it will enable more buyers to re-engage with the market. We don't know exactly how far the rates will come down. Unlikely they will make their way back down into the threes. However, they could well come down into the high fives. That's better than where they've been. That may be enough for some people to re-engage with the market. Another way that it will have an impact on the market is it will change the inventory, because sellers will begin to put their properties on the market because there will simply be more reason to. There will be more buyers for their properties, so they have incentive. The other reason for that is many sellers need to have some place to go. And with the higher interest rates, it hasn't made sense for them to sell their places because they can't afford to then turn around and buy something. However, with the mortgage interest rates coming down, if they come down far enough for some of those sellers, then the numbers will make sense. Seeing more inventory in the market is a good thing, and we need it. So having more inventory in the market will actually help to stabilize the prices. So even though the prices are down now, if we get more inventory on the market and more buyers engaged, it will just help to create a more balanced, more stable market, a healthier market. Very likely we will see more transactions. As I said, we had this, contract signed ninth place for the decade. Hopefully we won't have a repeat of that in 2024. So here are some factors I think we should be watching for in 2024. Mortgage interest rates are predicted to come down over 2024 by the end of the year, maybe high fives. They probably won't fall a whole lot lower than that. I mean, I could be wrong. I don't know if my crystal ball has it totally right. Very unlikely though that they're gonna really go below fives into the fours and threes. I mean, historically, if you look at the mortgage rates, those rates that we had in the threes, the twos, the four, I mean, that was just unprecedented. I don't know that that was anything we will frankly ever see again, but I could be wrong, but to be safe, I wouldn't count on it. So, keep an eye on this. If you start to see things dipping down into, the fives, you might want to take advantage of this because that may be as far as they're going to go. If that starts to happen, we'll start to see an increase in volume, contract volume, because people are going to get excited and the numbers are going to work for them. Again, inventory, if the mortgage rates come down, then the inventory will very likely rise. So the one question on my mind is, will these changes, this rise in inventory, this shift because of the lowering of the interest rates, assuming all of this actually happens, will it have any impact on this current spread between renovated and unrenovated properties? Because 2023, many buyers would not touch an unrenovated property. Historically, that was never a big deal. Many people routinely bought unrenovated properties and fixed them up and made them their home. It was only in this last year that we really saw, and maybe, around COVID, that we started to see this shift. But for sure last year, we saw a big pullback on that. Will people start to return to what was more of a normal pattern of buying? And will there be less of a retreat from this, or less of a shying away from unrenovated properties? We'll have to see if that happens in 2024. I would love to see that happen because there are some really fantastic properties that they shouldn't be selling because they need a little work. And I mean a little work. I don't mean a lot. I don't mean they're like a gut renovation. It's been odd that way. We haven't really seen that before. 2023. Third thing would be prices, which I touched on already, that, the prices will likely stabilize with more inventory coming on the market unless the rates fall tremendously, like I said, unless they suddenly go into the threes, which would cause a glut of inventory, which would just cause just a frenzy. When you get a glut of inventory, then the prices kind of get affected by that too. The interest rates fell in a huge way. You would think that would be great for a market. It actually kind of destabilizes things, at least short term. So I don't know that would be a great thing to wish for, but definitely we need to see those interest rates coming down so more people can get back into the market and we can see more inventory. I do think that unless we have some bad news, so those three things, right? Mortgage interest rates, inventory prices, those are the three things that are kind of real estate specific. The rest of the world news or the stock market or the Feds, whatever, all that stuff also plays a part. And lest I forget, it is also a presidential election year. Historically, that has at times created some turbulence in the real estate market, but we don't know if it will this year. Essentially, if things stay relatively calm overall, and these other factors that are more directly real estate related, so if these things are all in play, these things that directly impact real estate, right? Mortgage interest rates, inventory, price, etc. And we don't have a lot of crazy news. Very good reason to think that 2024 could, at the very least, be an incrementally better year than 2023. Maybe a much better year. It'll really just remain to be seen. I'm going to keep an eye on it, and I'm certainly going to keep reporting on it so that you have all the latest news on what's going on here. As always, my thanks to the Olshan Luxury Report and to Urban Digs. The work that they do helps me to help you to make great decisions. If you have any questions, you can post them below or reach out to me at Sotheby's. I'll be back next week with the very latest news on what's happening in the New York City real estate market. In the meantime, take care.